welcome back. You're watching our continuing coverage here of Budget 2023, live from our budget headquarters at the Confederation of Indian Industry. Joining me now are the budget architects, the Finance Secretary, TV Somanathan, and the DIPAM Secretary, Tuhin Kanta Pandey. Gentlemen, appreciate you joining us, and congratulations. 2 consecutive years, a big thumbs up coming in from across constituencies as far as the budget is concerned, and specifically from your former colleague, the former Revenue Secretary, Tarun Bajaj, giving you all an 11 on 10.
He's just being kind.
No, but Mr. Somanathan, I want to pick up on what has sort of become a pattern, and someone said it's almost systematically conservative, the estimates that the government puts out and then does better on them. And you acknowledged it yourself today as well, that the numbers that you have as far as tax is concerned and growth perhaps on the conservative side. How confident do you feel that, like you did this year, you are going to be able to do better on these numbers?
The aim is not necessarily to do better on any one set of numbers. The aim is to stay within the overall fiscal path that we have laid out for ourselves. Now, this year was a year of very severe challenges, unexpected things that happened after the budget was presented. But I'm happy to say that we have somehow, in spite of all those difficulties, are able to end the year at a deficit figure which is the same as we started with, despite so many things having changed. So I'm very hopeful that we may not see that level of gyrations in global commodity prices and international events next year. So I think conservative is one way to look at it, but the other way to look at it is that we are being as realistic as possible with an emphasis on numbers that we know are going to be achieved. Now, we may overachieve, but it's the number which I am confident that we are very likely to achieve.
But what are the odds on overachieving?
That I don't want to hazard a guess. It depends on events. If you had looked at last year when we were sitting here, many of you thought that we were being over, conservative and so on. But events proved, and events have a way of happening. Nothing can be predicted.
No, absolutely, and we need to be mindful of the external realities as well. But you talked about the deficit number, and it's 6.4%, and you have stuck with the glide path of getting to 4.5%. Yes. I was just chatting with the folks from Moody's a short while ago, and their question, of course, while they credit the government with not deviating from the fiscal glide path, how do you go from 5.9 to 4.5?
Yeah. So that requires a correction of approximately slightly more than 1.4% over 2 years, which is 0.7% of GDP over 2 consecutive years. We have consolidated approximately 0.5 each of these 2 years, and these have been 2 difficult years with unusually difficult circumstances. COVID second wave, COVID second wave in 1 year, Ukraine and external environment in the second. As in the markets, there is hopefully some kind of reversion to the mean where adverse events decline over the next 2 years. Without adverse events, we would have probably been able to consolidate even faster. Now, in spite of adverse events, 2 consecutive years we have consolidated by 0.5 each. And it's quite feasible, quite realistic that we would be able to do 0.7% each of the next 2 years. There's one factor that people should look at. A lot of the composition of our 5.9% fiscal deficit, the revenue deficit is a mere 2.9%, and the revenue deficit is now lower than it was in the pre-COVID year. So capital expenditure is more flexible, and it offers us an ability to calibrate it in accordance with the available fiscal space, which cannot be said for uncontrollable items like interest or salaries or pension. So the composition of our expenditure is such that I think we will be able to do the consolidation at the pace that is necessary, which is 1.4% over 2 fiscal years. 1.4%
over 2 years, and you believe that that is going to be doable at this point in time?
And I think it is not an accident that the commitment was reiterated in the budget.
No, I would imagine it's not an accident if she did make that commitment in the budget this morning. But let's address the Capex issue, because that really is the big headline coming in from this budget, a 33% increase, and that was the hope, but people were not expecting the government to go as far as this. Now, on that front, and I know that it's largely railways, highways, states, and of course petroleum, where about 35,000 crore rupees has been allocated. On the state side, Mr. Somanathan. You said that it's been an interesting experiment over the last 2 years of getting the states to move on the reforms that are linked to the Capex.
Yes.
Now, what is the feedback on that front? How confident do you feel of the state's ability to be able to take this forward, do the reforms that are required in order for them to be able to do the Capex?
See, this year and next year, and we've said it very explicitly in the speech, a substantial part of it is actually not linked to reforms. There is a substantial part of the state capital investment loan which is untied, and where states choose projects, the only thing we look at is whether they are productive capital projects. So we don't actually tie everything to conditions. But there is a component which is tied to certain reforms, and we have laid out some of them in this year's budget speech as well. So there are these two components. I think the untied component will almost certainly get very largely utilized. And I expect a substantial portion of the reform-linked component will also get utilized because, as I said, the learning for states in terms of how we administer this, the fact that they are now used to this, I think they will be faster at complying with the reform conditions. Not all states in all schemes, but most states in most schemes. So I think we are fairly confident that this extra amount will get very substantially utilized.
Okay, will get substantially utilized. I'll come to the subsidy issue in just a second, but let me bring in the DIPAM secretary as well. You know, many saw the disinvestment target in the budget as perhaps more pragmatic and a real number. Some were disappointed, hoping that the government would have batted for a more aggressive target. But I want to understand from you what you make of this target and the complexities involved with being able to achieve it, because you're still 34,000 crores short on this year's number.
I think we've learned a lot from my experience. As you know, the disinvestment is not only to garner resources, but also in a way, you know, to reform the enterprises going forward and look at their potential once they are disinvested. Now, there are two kinds of disinvestment, as you know. There's where we hand over the management control. Another one we list in the market, or we do the minority stake sale. Now, over the last period of last 2-3 years, which are really the period with extreme market uncertainty, where markets go up and down all the time, and that is really the challenging situation we face. And I would say that it is like B M square P. You know, there are 4 factors which have really conditioned our this pragmatic number. First is the bandwidth, the reducing bandwidth. As you know, 4 lakh crores have already been, 4.07 lakh crore has already been done over the last 7-8 years. So we have a reduced bandwidth. The second one is market, of course. As you know, the markets go up and down and the valuations change. And third is very important, is minority stakeholders. We must also keep in mind their interests, particularly when we are doing disinvestment in the market through offer for sale and so on. And the fourth is, of course, the process. In any process which involves handing over of management control of public assets, it has to be, the price discovery has to be through a competitive bidding process. And we necessarily have to change because, face the court cases and other opposition, because, you know, it's a public sector assets and people do really challenge it in the courts. So if we really see overall situation, this, as I said, B square MP, BM square MP. So we have actually a situation where we will go for this continuing reforms, continuing with the target and trying to achieve. And it fits into the overall framework of achieving realistic numbers. Really.
But IDBI Bank, that's the next one on the calendar. So how confident do you feel about that going through in this fiscal?
IDBI Bank, very much we hope that we should be able to conclude.
In this financial year?
In the 23-24, in the coming financial year.
Okay.
Because now we have initial preliminary bids, expression of interest, and now we have moved forward for the due diligence process as well as the bidding.
So that slips into the next financial year. You know, a calendar, Container Corporation, SCI, I mean, do you have a pipeline now where you feel more confident and ready with which you can go to the market?
Yes, I think several of them are in advanced stages. Wherever we have Concord, of course, is the EOI, which we are going to, you know, come up with soon, because it's already a cabinet-cleared proposal. We had been working for this for some time. The land lease policy has recently been announced by the railways. So And there are several which are in advanced stages, which will go for conclusion.
Okay, I'll come back to you in just a second, but let's address the subsidy issue, Mr. Somanathan. FY24 fertilizer subsidy at 1.75 lakh crore, food subsidy 1.97, and petroleum subsidy. And, you know, I was talking to the Oil and Gas Minister, Hardeep Puri, as well. The OMCs have, of course, sought compensation, which the Finance Ministry has denied. But is the door shut on that, or do you believe that there could be a slight window open to be able to deliver on what they're asking?
If you don't mind my saying so, if the window is open, we won't allow you to peek into it. No, we do not envisage, at least as of now, do not envisage revenue subsidies to the petroleum sector. I think we have paid a heavy subsidy this year, 22,000 crores extra beyond the budget estimates. But it's our view that by and large the sector will stand on its own feet in revenue terms, and so no, as of now we do not foresee revenue subsidies for the petroleum sector.
You know, on balance, at least as far as the domestic economy is concerned, what I've heard from each one of you, that you are feeling confident about growth. The survey said recovery is complete, and I would imagine that means we're on the path to resurgence. But what would you be most concerned about? Are there any risk factors from the domestic environment that you would be concerned about?
The domestic environment is not what really is of... again, as I said, the numbers we have presented, we have considered various scenarios, and we are presenting something that we think will withstand most foreseeable events. I mean, there could always be an unforeseeable event. So on the domestic side, I don't have too many concerns, things that I can predict. The unpredictable is, of course, something that we can't anticipate. But on the international side, if there is something of the magnitude of what happened in Ukraine last year, it could be anything. It could be Ukraine, it could be something else, which has major effects on commodity prices, oil prices, gas prices, fertilizer prices, or which has a major effect on, you know, global growth. I think that could be a concern. I think in one sense, global growth is not the biggest of our worries, because paradoxically the fact that we are not an economy with a very high level of export penetration is actually a good thing when you have... It's actually working to your advantage in the coming year. So I think exogenous external shocks are the things that would throw us off. Other than that, I think we have fairly robust chances of sticking to, broadly, to the aggregate net numbers that we've presented. I understand, and we wish you a good night's sleep today at the end of putting Budget 2023 to bed. But thank you very much, TT Somanathan and Mr. Tuhin Kanta Pandey, for joining us here on CNBC-TV18. Appreciate your thoughts, and we look forward to seeing you on the budget verdict. We will take a break, but budget makers continue to join us here live in our studios. The CNBC-TV18 budget headquarters returns after this short break.
For how long will you continue being tensed about the future? With LIC's new Pension Plus, make your own pension plan, because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension, so that you grow young and tension-free. LIC, har pal aapke saath.
What if you were a global bank who wanted to crunch billions of transactions against thousands of compliance controls? So you tap IBM to unsilo your data, and now you can supercharge your audit system with AI. Let's create smarter ways of putting your data to work. IBM, let's create.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV, drive what drove India electric.
सपनों की नाव लेके चलूं मैं साथ में तू हो मेरे क्योंकि तू खास है ये एहसास है सांसों की तरह तू दिल के पास है
70 years of trusted care backed by science and innovation
क्योंकि तू खास है
चाहे खरीदना हो अपना घर या हो रिटायरमेंट के लिए फाइनेंशियल प्लानिंग मुझे फ्यूचर की कोई चिंता नहीं क्योंकि मेरे पीछे एसएमसी है
SMC, money wise, be wise.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
When it comes to making your drive electric, never settle for the ordinary. Go EV with India's #1 EV, Nexon EV. Proven and trusted by over 40,000 customers. Feature loaded and safe, offering a premium driving experience. Now with enhanced range and an exciting new price. Nexon EV. Drive what drove India electric.
You're watching our continuing coverage here from the CNBC-TV18 Budget Headquarters. I'm Shireen Bhan. We're in conversation with the budget architects. Right here with me in the studio, Revenue Secretary Sanjay Malhotra and the Chief Economic Advisor Anantha Nageshwaran. Gentlemen, appreciate you joining us. And once again, congratulations on a budget that has been very well received. Revenue Secretary, let me start by asking you, and I think this is something that the Economic Survey had sort of hinted at yesterday, and it's of course been taken forward in the budget. Again, as far as tax collections are concerned, buoyancy is concerned, both in the words of the Finance Secretary, conservative and hoping to do better or replicate the kind of gains that you saw in this year. How confident do you feel on that front?
Yeah, we have had good revenues. You are aware, both direct taxes and GST. The gross collections are growing at 24% this year, as I speak. Next year, we have, in line with the growth in GDP, 10.5% is what the budget document aims at. And I think realistically speaking, 10.5% is a good figure even for the revenues to grow at. And so we are pretty confident that we should be able to meet those targets.
On GST, and I want to address that because overnight we saw the GST number coming in now, 1.56 lakh crores. What will be the run rate that you expect from here on? The expectation was 1.5, 1.51. Is this likely to be now the run rate that we should look forward to?
Yeah, I mean, this new base has now been set. 1.5 lakh is the average now. In fact, as we, from the numbers that we gave last evening, we got an increase of about 1,600 crore rupees. So it's 157.5 and not, 156 that we gave out, earlier. So, but that becomes the new base. And we do hope, that we should be able to continue with the growth as the economy increases, as there is growth in economy. So in line with that, this should also increase.
Let me address the issue of the change that's come in on personal income tax. I think it was an acknowledgement on the part of the government that the changes that had been introduced to try and get people to move to the new tax regime, it didn't work. And sweeteners needed to be put on the table, and which is why the finance ministers announced these new 5 tax slabs. But do you feel confident that you will get people to shift? You said that there is no reason for lethargy any longer and people should move. But you still have the option of continuing with the old or switching to the new. Do you believe this time around people will switch?
Yeah, I think the benefits that have been given in this new scheme. Firstly, this is a continuation of our move towards no exemptions. So it's not only, in personal income tax. You are aware, even in the corporate taxation, we have a regime of without exemption, taxation without exemption at 22% vis-a-vis 30% with exemptions. And over there also, now 61% of the tax, corporate tax is actually coming from there. So similarly, even on customs, of course, we did not mention it, but this is again something, for viewers, for everyone to know, is that we are moving away from exemptions even in customs, and so some 32 items we have reviewed. We had announced it earlier that every 2 years we would be doing a review of exemptions. So in line with our thought process of going away from exemptions, Even in customs, we have now not continuing, 32 exemptions. Similarly, in the personal income tax regime, while we have not tinkered with the old scheme, whatever benefits are to be given have been linked only to the new tax regime. So one is rebate, an increased rebate of 7 lakh, which becomes equivalent to, a 2 lakh investment, 5 lakh plus 2 lakh investment in the old tax regime. Slabs with lesser taxation starting from 3 lakh vis-a-vis 2.5 lakh in the old scheme. And then, even the surcharge, of course, numbers will be very small. But for the salaried classes and the pensioners, including the family pensioners, there is an additional 50,000 standard deduction.
Right.
So with all these things put together, I'm pretty confident that majority of our taxpayers in the personal income taxation regime should now be opting for the new regime.
So you said that this is now the new default tax regime. Then why continue with the old one?
We don't want to make the change too abrupt. And so that's why, it's a gradual shift.
Okay.
People who prefer to be in the old scheme, there are some exemptions. Let them continue to have those exemptions as long as they feel that the old scheme works better for them. So we don't want to make it less attractive, but we want to make the new scheme more attractive and let them, come on their own rather than force them to join the new scheme.
Okay, there's lots of questions that I have on insurance. I'm going to get to that in just a second. But see, let me address this issue of what's happened on the personal income tax side. And if the Revenue Secretary's confidence bears out and more people move to the new income tax scheme, what will it mean in terms of consumption and the kind of consumption boost that we can expect?
Look, most of the youngsters who haven't had historical deductions to worry about or think about, they will naturally feel it is safer and simpler to work with the new structure. What it does to consumption, naturally the entire thrust of the tax package announced in the budget today is about putting more money in the hands of people, whether it is retired people, old age, elderly people, senior citizens or the youngsters. So I think it will, on the margin, it is going to be positive for consumption growth.
It'll be positive for consumption. On the insurance questions, and as I said, I've got a plethora of questions that have come in. Is the 5 lakh rupee threshold for premium paid in 1 year or over the term of the policy? That's question number 1.
Yeah, so it's 1 year. So every year, you can contribute 5 lakh rupees towards one or more than one policy. And this is in addition to the 2.5 lakh rupees limit that you already have in ULIP. So overall, insurance basket, you can buy policies worth 7.5 lakh rupees year on year on. Every year you can pay that premium. So it's not over the life term. This limit is not over the lifetime of a policy, but this is an annual limit.
It's an annual limit. And, again on this aggregation aspect, is the threshold per policy or aggregate of all policies?
Aggregate of all policies.
Aggregate of all
together
policies.
For an year. For a year, but not over the term of the policy.
Okay, so aggregate of all policies for a year, not over the term of the policy. And will only proceeds from premium above 5 lakh rupees be taxed proportionately, or if a person crosses the threshold, 100% of the proceeds will be taxed?
That's right. If it crosses 5 lakh rupees, then that particular policy gets taxed.
Okay.
So he can always choose, to divide his policy and keep the premium, the 5 lakh premium, the policies with premium up to 5 lakh separate. If he wants to buy, still wants to buy a policy more than 5 lakh, that 1 lakh rupee policy can be different. So that way, he can avoid taxation on premiums, policies with premiums up to 5 lakh rupees.
The government's rationale for bringing this change in is to stop the abuse, so to speak. What we saw today in the market was a massive disruption. All insurance companies sold off on the back of this. One is, of course, the concern on what this means. HDFC Life, for instance, on our channel seemed to suggest that this could have an impact of 10 to 12% on the top line and 5% on the bottom line of the company specifically. The other concern that was raised by many tax experts is that since you are talking about moving away from an exemption era to a no exemption era, what will it mean as far as the insurance sector is concerned?
So as I mentioned, insofar as two things I would like to clarify. One, Old policies, there is no change. So if you were even having, policies with premium more than 5 lakh rupees, that doesn't, change. That doesn't, I mean, the taxation doesn't change on that. The second thing is term insurance. There is no taxation on the sum assured received by a dependent from term insurance. Insofar as, the overall insurance sector is concerned, let me give you a statistic. LIC has 16 crore policyholders. Of the 16 crore policyholders with premium, aggregate premium, annual premium, more than 5 lakh is about 1.97 lakh only, which is 1.2 in 1,000, 0.12%. It is not even, 1%.
It's 1/8 or 1%.
So it's very, very, very small. And so, the impact, I don't think even on the top line should be, as high. I think it's an overreaction, but that's how it is, and we'll find out.
Well, thank you very much for those clarifications. I think that that adds great clarity to the confusion that people had with respect to this. But see, you said that this budget does something for putting more money or more disposable income in the hands of the consumers. One of the quibbles, of course, has come in specifically on the rural budget side, on items like the NREGS, where the RE to B is lower. Now, I understand that it is a demand-driven scheme, and hence, if more money is needed, more money will be allocated. But what does that tell us? Does that tell us that rural economy is actually in a better position today, and hence we're not seeing people opt for the NREGS?
No, for example, last year in the current financial year, 22-23, the initial budgeted amount was lower than the previous year's actual, but then when the demand came, it was met. So the lower allocation reflects the government's confidence. As the survey stated, the recovery is complete and we are looking ahead to a steady medium-term growth, and therefore there will be opportunities for reverse migration to happen towards urban cities and for consumers to demand less of NREGA compensation. But if you look at the allocation to projects like Jal Jeevan Mission and Prime Minister Awas Yojana, there are a very clear step up in the allocation. So this project, this particular scheme, because it is demand driven, and the expectation from the government side is that there is going to be more employment opportunities and there will be less demand, but should situation change and there is greater demand, it will be met. So it doesn't signal a lesser of a priority or attention to rural unemployment problem. That's not the messaging here.
That's not the message that is being sent out. But, I want to, Mr. Somanathan here said he feels confident that you will be able to get closer to that band that you laid out as 6 to 6.8%. Do you believe that it's likely to be at the higher end?
Look, at this point it is too premature. We are not even done with the current financial year, and we all understand that there is so much of global uncertainties. So at this point I wouldn't like to speculate on whether we are going to be at the upper end of the band or lower end of the band. I will stick to my baseline.
Revenue Secretary and Chief Economic Advisor Anantha Nageshwaran, many thanks. We hope that you get a little bit of rest today, but of course I know that you're also on the assembly line of interviews, but thank you very much. We appreciate your time, and thank you very much for the clarifications that you've shared with us here this evening. The budget architects here at the CNBC-TV18 budget headquarters. We will take a break, but don't go anywhere, because we'll be back with the chiefs of the CBDT and the CBIC right after this short break.
Thank you. Thank you.
Co-present